Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitment to Traders review. Today we're going to have a look at the 12th CO2 report of this year, but before I go into this review, I just want to remind you guys about our new service, FuturesTradingGuides.com. If you haven't yet checked it out, please do so. Thank you. Back to the review. Let's start off with our first market, which is the New Zealand dollar is on top of our list regarding changes in commercials positions. There's a 38% change in commercials positions. Of course, this is the 5 years chart. Back to the 1 year, you're going to see this. Here we go on this 1 year's chart. You can see it is unquestionably the largest, or well, maybe the second largest, but definitely amongst the largest changes in the past 52 weeks. It is of course, a bearish change signal, pushing commercials back down to net short territory. Last week, you can see they were just barely above the zero line. Of course, large speculators, just the opposite. They're net long, 20,000 contracts actually, as you may see on the chart. So jumping to the 5 years chart, you can see the extreme situation in this market right now. The last major extreme was this bullish extreme, and the one before, which was the largest bearish extreme in the market, back over here mid 2017. Now, of course, we're not at those levels. And also you can see there has been a bit of a decline in the market. One thing's for sure, the bearish extreme seems to be a bit larger now, which suggests further declines in the market could be possible. The next market is the Japanese yen with a 37% change in commercials positions. Again, we're talking about a very large change size. On this market, you can see it is unquestionably the largest change in commercials positions. Also, it is the largest change in large speculators as well. And of course, it's a bearish COT change signal coming after prices are skyrocketing in the yen. So of course, caution is advised due to the dynamics of the market. This does not mean prices will tumble early next week, but of course there's a chance for that. Jumping to this 5 years chart, we can see the extreme situation. The last major extreme was this bullish extreme the end of last year. Since then, as prices have gone higher, the extreme decreased from the bullish side, and it is increasing towards the bearish side of the market. But as you may see on this 5 years chart, there's still plenty of space left, which means further increases in the market. I mean, prices in this market is quite possible. The next market is Oats with a 35% change in commercials positions. As you may see here, we are talking about a bullish COT change signal. What's surprising is also, again, this is the third market in this review that I'm showing which is producing the largest change in the past 52 weeks. So interesting stuff happening from the COT perspective this week in the markets all around. So this is a bullish change signal suggesting prices should increase early next week. Jumping to the 5 years chart, you may see that the most bullish extreme was back over here mid 2015. Of course, we're very far away from those levels, and the most bearish extreme was actually back over here in mid 2013. So we're more or less in between those, and you can see these relative extreme pushing back and forth the price of Oats. We may actually be a little bit closer to a relative bullish extreme. I mean, if we are looking at let's say a 1.5 year period in the market. Jumping to large speculator COT Extreme, we have silver followed by sugar, both with all-time COT extremes, not only in large speculators positions but also in commercials. So you can see here we have silver. Interestingly, both commercials and large speculators are net short. Only small speculators are optimistic about the market. Nevertheless, this is still a bullish extreme. Unquestionably, if you look at the chart, it is a huge extreme. So never in silver's history have we had such a bullish extreme in the market. Large speculators have never had net short that amount of contracts. So that's interesting. And if we look back in time, you may see what happened to the market when there was such a bullish extreme, and you may see pretty well that there are many examples when the market reacted well to these extreme signals. The next market is sugar. Let's start off with the 5 year chart. and see this all-time extreme, which is, as I said, visible not only in large speculators but also in commercials. And well, there's not too much I can add to it. I mean, it's an unquestionable bullish picture. Prices have gone down for many months, years now actually, and we've reached this bullish extreme, which was actually present in the market for quite some time now. The fact that it's showing an all-time extreme should not surprise us. It's definitely suggesting in the medium to long term a major change in the trend of the price of sugar, meaning we can see higher prices coming. And then the last market for this review is cocoa, which with a modest 81 report extreme fit into our review. You can see the last major extreme was this bullish one back over here in mid 2017. Prices since have gone much higher, and of course as they have been rallying, you can see that the participants of the market change their positions accordingly. Of course, the question is whether this is already a significant extreme to talk about a bullish move. That's of course a question, but this 5-year chart easily shows you that there's definitely plenty of space left for traders to increase their positions. Commercials increasing their net short positions, of course large speculators increasing their net long positions, which means if that continues, we can easily see even higher prices coming. But the stress level is building up, that's for sure. So that was all for this COT review. I hope you enjoyed it, and I hope to see you next week. Have a great weekend. Take care. Goodbye.